Inflation is ramping up to the highest levels we've seen since the 2008 crash, and it's making things very expensive. Like if you go shopping at your favorite grocery store, the prices of things are shooting up and fast food prices have been skyrocketing, and the prices of home and housing costs have been going through the roof. It's insane. So if you want to know what's going on and how you can profit from all this inflation that we are seeing, make sure you watch this video until the end. Between 2020 and 2021, countries around the world printed trillions and trillions of dollars. The whole purpose behind this money printing was to help stimulate the economies and give money to people and businesses when the whole world was shut down. Well, this was kind of a band-aid type of approach, because that gave people a short-term solution to a bigger problem which was at hand. But now we are all paying the price of all this money printing, because this money printing caused the value of our dollars to be diluted and the price of everything from groceries to your housing to your food have been shooting up. There's always a price to pay for anything free, and in this case, we are paying the cost of free money. Now what you want to do is be financially educated, know what's going on and how you can profit from it, which is what I'm going to be talking about in this video. So why are we seeing this massive inflation right now? When most people try to envision what inflation is, they think of price of things going up, but that's not exactly true. Inflation is actually when the value of your dollars get diluted. So you could think of it kinda like your money gets a demotion. You can think of it like supply and demand. When you don't have a lot of money out there, the value of each dollar is a lot more. But now because you have a massive increase in supply, now the value of each dollar isn't as much because you have a massive supply of dollars in the economy. These dollars are our fiat currency, which means this is the thing that we can use to exchange and buy and sell things. That's a good thing because it makes it easy to value things. I can go to a store and see a pen and know it's going to cost me $50, and it's very easy for me to understand. It's going to be harder and harder for people to survive because people's wages are not growing by 3 to 10% a year, while the prices of things are skyrocketing. So if your salary is not being increased, how are you going to match up with inflation? Eventually, we might just hit a point where people cannot afford the cost of living. Because of what's happening now, the way you can profit from all of this type of inflation is by converting the money that you have into an asset that will grow in value. We live in a country that is run on dollars, so if the value of our dollars are dropping, you want to convert your dollars into something that does not drop in value. Something that at least maintains its value, so as the value of your dollar drops, the price of the asset you own is going up or at least maintain its value. So if this asset is maintaining its value, it's gonna cost more money to buy it in the future because the value of the dollars are still dropping. You want to own this asset right now before it gets more expensive. So the first asset I'm going to start with is real estate. When you invest in real estate, you're investing in something real, something physical, something tangible that you can see, feel and touch. So you're going to buy a house, and instead of living in this house, you're going to rent it out to somebody else. Let's say you find a nice couple to move into your home and they start paying you $1,500 a month every single month just for living in your property. So now that you own a physical asset, you're getting cash flow from this asset. So here's where things really get interesting, especially if you're talking about inflation. So the thing is, everybody pay attention to the value of their home. Let's say you bought a home for $200,000, right? If you continue to see more inflation, if home prices continue going up, maybe in the future this home is going to worth $250,000. What you should be really paying attention to is the cash flow, because now what you have to understand is that when you buy this property, you just built a brand new stream of passive income. And to get this paycheck, you really don't have to do much work to manage this property. And if inflation happens, guess what else is going to happen? Rent in the area is going to go up from $1,500 a month to $1,700 per month. So guess what you can do? You can also raise your rent to $1,700 per month. Because as time goes on, and if you continue to see inflation, housing prices are gonna continue to go up. I want you to make your investment decision based off this. If your property is profitable, meaning it pays off all your bills and is putting some money in your pocket every single month, even if home prices crashes, you'll be okay. Your property is profitable. The second way that you can profit from this inflation is by owning some of these companies that are selling products. Because as companies have to charge more money, they're going to see higher revenues. You are benefiting from inflation because the company that you're investing in is making larger revenues. Now that might not mean they are selling a whole lot more products, they are just making bigger revenues. So as an investor, you want to be on the producer side of things, the one that is selling the products, not just the consumer that is just having to buy the products. This is what financial literacy is all about. You don't want to be just a consumer. You also want to be a producer because the producer is the one that is making the money. Remember, when you invest in stocks, you're buying a piece of ownership of that company. So if you go out and buy one share of a company like Apple, Facebook, Grace Kennedy or Amazon, you become one of the owners of these companies. Now, with one share, you don't tell the company what to do or how to run their business. What you get to do is get a share in their profits. So if you invest in these companies, inflation continues to happen. These companies are then have to go to increase their prices to increase their profit margin. Now, you're going to be on the winning side of things because you are not just the one who is buying all these more expensive products, but you own a piece of the company that is selling these products. And typically, if a company is seeing growing revenues, generally, you will see an increase in the stock price. The third thing I want to mention is cryptocurrency, because you all know cryptocurrency has been very popular since recently. To the moon, they say, right? Now, cryptocurrency has a lot of speculation around it. It has a lot of people who are trading the market, which makes it very volatile. Cryptocurrency does have its place because the whole idea behind cryptocurrency, especially things like Bitcoin, is you cannot create more coin out of thin air. It has to be mined. It takes work to do that, and so that's what gives these coin value. But there's a lot more to cryptocurrency than that because there's a lot more value behind the blockchain. So if you want to put some money into cryptocurrency, that's fine, but you have to understand that there's a lot more to cryptocurrency than just trading it for a quick bucks. The last thing I want to talk about is the risk associated with everything that is going on. For example, in the US economy right now, if you have been paying attention to the financial news in any way, shape or form, chances are you've heard people talk about potential housing market bubble, potential stock market bubble, and a potential economic bubble that is brewing. The whole idea behind that is that you have this money that was being printed causing the new inflation that is going on, and at the same time people have a lot of money right now. Some people are still living off unemployment and stimulus checks, and on top of that, people are not having to pay their mortgages and student loan because of forbearance programs. So they have a lot of extra money every single month, and people are using the money to invest, some people are using it to go out, some people are using it to buy random stuff. And this spending will eventually come to an end. It's going to get to a point where people are not going to be able to put their mortgages and student loan and forbearance program anymore. So people are going to have to start making their mortgage and student loan payments again. When that happens, people are going to have less disposable cash to do the things that they were doing before. So if we hit a point where prices of things are way up and the amount of money that people have to spend are way down, then we're going to see some discrepancy. It's going to be harder for people to go out and just shop, which means company might start making less profit. And if at the same time interest rates also go up, it's going to be less attractive for people to go out and buy a home, which could bring housing prices back down. So the thing that I want to understand here is that it's not that you shouldn't invest in these assets because there's a potential risk of correction or a market crash, but you should understand the risk associated with it. There's always a chance of a market crash, but nobody knows. And market crash present excellent buying opportunities. And when you go about investing, you shouldn't be investing money that you want tomorrow, and it should be money that you're willing to lose. If you have enjoyed this video, don't forget to like and subscribe. Look at your screen now to see 2 other videos that you might be interested in.